Morning everyone, this is Paul with GammaEdge. Today is Tuesday, the 3rd of May. Let's get started. Pause your screens right now. Please read this. Important to us, important to you. When you get done, go ahead and hit play again. Taking a look at where we normally start here, looking at the indices. We are seeing some bullishness, but fairly weak. Overall condition, you can see the red wing, which is indicating the net negative gamma condition, just is dominating the conversation. Compared to the previous day, we did see a drop in puts, but we're also seeing on the SPX a slight drop in the call positive gamma condition. So want to take note of that. SPY is a little different. We saw puts drop, we saw calls increase just slightly. Qs, same thing. Puts drop, calls come up. But you can see very large difference between the two. And almost a flat line, virtually no calls at all in the IWM. And we actually saw puts increase in the IWM. So across the board here, kind of a mixed picture, not very strong despite yesterday's face-ripping reversal. Day one is not a bull market. Near-term expiries, you can see across the board, net negative expiry, either today, which is the SPX, or tomorrow is the SPY. I've highlighted a couple key areas here. We're getting close to the transition zone, the zeros here. And you can see where we landed. The black dot here indicates where we are. As this moves up, less and less of the puts are in the money, and frankly, less calls are in the money too, especially at the zero. A lot of folks ask about this, and the bottom line is there's really no pressure as we get closer and closer to the zero. The dealer exposure gets minimal, and as a result of that, we don't see a lot of pressure one way or the other. So just be aware of the area that I highlighted here. Train your eye to take a look and see where we are actually landing and how close to the zero we are, where we are in relation to the net negative gamma and the net positive gamma, which you can see in almost all cases here. We're a fair distance away and not really in any forced push one way or the other. Gamma history, in general, what we're seeing across the board is we're really far below the zero, so that net negative gamma condition exists. When we're below the zero, puts dominate. We did see some monetization go on yesterday, and then it dropped at the end of the day in both the SPY and IWM. It actually held up there at the end of the day, so this is actually a little forewarning that when we see this type of action, people are actually anticipating a little more downward action. So I would look for the IWM to show a little bit of weaker behavior. The fact that calls have come in the Qs means there was probably some closure up here, folks realizing they weren't going to get anything and trying to take some time value off the equation, out of the equation there, and just save whatever they had up there. Not seeing a lot of movement down here below the price. In general, pretty weak across the board for the bulls. I think the bears are fully in control, and you can kind of see your eye follows the downward slope, which is no surprise to all of us. When we take a look at the flow summaries, the SPY in the put side, a lot of wild action yesterday, but it ended the day flat. The calls were actually net closed, so less demand for the calls. That's the green line here. Overall net negative on the overall combination of those. For the Qs, we actually did see some puts being closed into midday, and then a little bit of action that was counter to the price action. We actually did see some of the puts actually being put back on, which is kind of interesting. So we get this monetization flow this way, we get some dealer adjustment pushing price up, but then we also see people starting to buy puts again. You can see calls were flat on the day, very little demand there. Despite all that, net positive on the overall premiums, but I think this is a flash in the day. I don't think it's going to carry us too long. You'll see why here in a little bit. IWM, as I said, we saw a lot of put buying midday, big transactions there, and then ending the day net negative on the overall cumulative here, disconnecting from price, and you can see again calls not really participating at all. So across the board, even though price really rallied hard into the afternoon, it's not really supported, at least by the flows, that net flows that we saw. Taking a look at the cumulative tick market model, we did get an intraday reversal. I always like that. I think that's good. We need to see a continuation to the upside. We'll see if we get it this morning. We are in a longer term downtrend. We need this white line to push above for us to have any confidence to go long in any large size. We're simply not seeing it. You can see big hole here. We didn't really recover in the afternoon. Big down there last Tuesday. In general, sell the rips. That's my mentality right now, and looking to do that. Taking a look at the SPX, put all the updated values in here. We have had a few go up. We've had a lot of these come down. Part of it's vol coming out of the complex. The other part of this, though, is that we think puts are being added. And when you add puts, you bring both the deltas and the zeros, the gamma zeros of the complex down. So we're seeing that. Just pay attention to that. Pay attention to these levels and where we were yesterday. Taking a look here at the ES, this is the June contract. Again, overnight we've had a significant drop in volatility. We're now down to 32 compared to being up around 37 yesterday at its peak. A continued removal of vol will bring some levels down and bring prices potentially up. 4,200 on the ES is probably the next line in the sand that we want to watch pretty carefully. You can see that the zeros of the complex are well above, all the way up in the 43, upper half of the 4,300. So we're a long ways away from this, and so I don't anticipate any bullish action that's going to signal us to go long in a major fashion there. No real change here on the overall SPX structure. We're back here at 41.55, almost where we started yesterday. Also, I've highlighted all the key levels here. We've got a lot of red to plow through, and I want to note this was 10,000 peak at auto ranges, but it was 10,000 on NetGex yesterday. You can see it's now halved that, and that's just because there's no demand in calls that are up here. So we've got a lot of downside protection building in, not seeing calls build in, and until we start seeing calls build in and the scale, start moving up, I think the outcome is preordained. Taking a look at expiration here, the monthly AM settled is dominating again all of the air in the room. As I said here, you can see that in the next couple of weeks there's not really a lot going on here. We may see some vol come off and give us a push up into this, but in general we've got a net positive expiry, very small, might as well be zero for today, Wednesday, and then Friday. Friday's the most significant for the week. We could see some additional monetization and push upward, but I wouldn't necessarily count on it. We're going to hit some upper levels here, as you'll see. The 0 DTE today, very weak. I would call it, a coin toss. We're right above a transition zero in the expiry, all the way up here at 4,300. We do have some coming off, and then you can see where the gamma peaks are here, 4,200 and 4,120. Not really expecting this to have a lot of impact here for today. On the combo, which is the AM and the PM, we don't add the SPY in there at all, so this is just purely the SPX complex. 2.97, so call it 3. That's this line up here. Also down here, this is the open, high, low, close. Make sure you understand that what's really remarkable here, we're still incredibly elevated in that net negative gamma, and you can see why, right? There's nothing up above us and just nothing but red, just pure red. I highlighted a few net delta dollar levels here as we go through these. This is the net delta adjustments that are required. These are huge numbers, by the way, folks. So when you are looking at these in the net gex here, these become very, very dominant lines. So even though the transition area up here in square 2 is there and it's within range, this horizontal blue line, I think the thing to take away is it's going to be incredibly difficult to close above this level or even close below this level. Although yesterday we did seem to cut right through this with no trouble. We came right on down to right in this zone, and then we recovered back up to where we closed last night. Closing in this level, I think, is going to be a big deal. So we'll just have to watch and see. Note 4,000 down here. Also want to draw your eye down here. We keep seeing more and more of the dominant expiry for May here, and that could have an influence also. So what we're looking for in terms on the bull side, the cumulative tick reversal yesterday could push us higher. The wing charts are showing a drop in puts and some addition of calls, but it's very, very weak. So this is about the best we're going to get on the bullish side, which is not very strong. Watch for continuation in the move. Play short term to the upside. 4,200 is kind of where I'm thinking from where we are. I don't think we're going to stay above 4,200 into the close. Watch for a move upward, so you can play those moves on all the indices, and then watch for that topping behavior. There's just a lot of overhead right now, and I think we're going to have to be aware of that. On the bearish side, cumulative tick is still in that longer-term downtrend, extremely high negative gamma. There's just a drop for calls, and when you have that, it's hard to move up. So for the downside, play divergences to the downside, which in this case, short the rips. If we do go up to 4,200, if we come back down through, I would play the downside off 42, and in fact, that's what I'm looking for. And then I'm also looking to play the downside through 4,100, just like yesterday. I think this is going to be sticky today and probably through the minutes tomorrow. So that's it for today. Come join us in our Discord. You can get there through this link right here, GammaEdge.us. That'll take you to a sign-up page. That sign-up page will get you access to the Discord for 14 days. All tools turned on. No risk to you. A lot of great traders. A lot of conversation going on about what we're seeing. So I'd urge everyone to come in, kick the tires. Follow us on Twitter, please, at GammaEdges with an S. And of course, you're watching this off YouTube. If you like it, bookmark it. If you like today's content, hit that like button. It helps us out a lot, actually. And of course, subscribe so that you can get notified of the next time we post something. So make it a great Tuesday, everyone. Good luck to all, and we'll see you in the Discord.